Hey guys, it's Dillar Schwartz, your Austin, Texas realtor, and I am back inside another listing in South Austin to do the math with my lender, Joel Richardson. We're here in this house in South Austin, and I personally think there's a very specific loan out there that's going to work beautiful, and it's called a renovation loan or a reno loan. I also know it's not very popular, so I brought Joel down here to the listing to check the facts and do the math. So let's bring in Joel. He's going to tell us a little bit about what a renovation loan is.
Sure. Thanks, Diller. A renovation loan, quite simple, means that you're buying the house and adding the renovations at time of purchase. And we will finance those renovations all with one mortgage. It's that simple.
So this is a really good loan for someone who, when we find a house or a product that's not really a true flip. Like this home here is, in my opinion, it's really great. We have zero structural concerns. What it needs is a little bit of paint. You've seen that. We need to scrape the popcorn ceilings, and the kitchen could be updated based on the new buyer's decisions or whatever style they like, right?
Yeah.
And other than that, this just really isn't a great opportunity for a flipper to come in and completely renovate this home. However, we do realize at this price point, someone may not have all of the cash on hand to do what they want to do down the road. So let's see if this house, if the math works. Okay, Joel, so tell me the top 3 perks that you think are the best things about a renovation loan.
Okay. Number one is you don't have to fund all the renovation out of pocket. We can finance up to 97% of the price plus the renovation cost.
Okay, so what happens if I don't use, like I budget $60,000 and I only use 40?
Good question. So that's a principal reduction at the end. So basically, you just owe the bank less. It doesn't change your payment up. You just owe the bank less.
Okay, and what's the second perk that we need to know about?
Well, these are 30-year fixed loans, and you can do conventional or you can do government financing. So folks that even have down to 620 credit scores can get these. And it starts amortizing right away. So it's just a fixed 30-year payment the entire time.
So there's got to be a hook. What's the rate?
Well, the example we're using is 6.375.
Okay, so that's not crazy.
No, because rates right now are just right at 6. So it's just a little bit above 6. And you have 1 year to do your project.
Okay, so I can move in. I can get an incredible rate. I'm going to finance all of my construction costs. And that's it.
Yeah, and it's great for anything permanently affixed to the house. So cosmetic changes, you can do some structural, you can add an ADU, you can do a pool, you can do an outdoor living space, you can do new appliances, and this one, you can scrape the popcorn ceiling. It's all good.
Okay, well, let's get the numbers going. Okay, so we've mapped out the numbers. Joel's walked me through. We've taken a look at the house. My estimate is really that this house with $40,000 would just be amazing, and that's with the renovation costs. So we inflated it a little bit. So we bumped it up to 60, but once again, I think 40 is great for this particular home. And I think the maths. So let's take a look at what we did here.
So basically, we have a $415,000 price. We have $60,000 of renovation costs. Now, Fannie Mae requires a 10% contingency on the $60,000 for $6,000. That's for any cost overruns or change orders.
Okay.
Now, you asked me a question earlier. What you don't use of the $66,000 is a principal reduction at the end of the project.
Perfect.
So you don't lose the money. You just owe the bank less. So let's assume 10% down. So a 90% loan of those things added up is $432,900. Your total PITI payment is $3,650.
That's really good for this area.
Yeah, at the 6.375 rate. So yeah, the property taxes here are $738 on this particular house.
Okay.
And so add up insurance, mortgage insurance, and the principal and interest payment, that's $3,650. Out of pocket, without any help from the seller, is about $60,000.
Perfect.
Yeah.
And in this market, we're seeing a lot of help from the seller. And I think that we're pushing these numbers up a little bit just to create some wiggle room here. However, one of the other benefits about buying a house I want to make sure that we touch on is what can we write off when you're a homeowner versus a renter?
Yep. You can write off interest and property taxes. So Loans amortize, you pay a lot of interest in the first few years of your loan. You're writing that off plus your property taxes for most people. We're not CPAs. You want to check with them. But that being said, is if you think about it, you could be writing off $2,600 a month from your interest and $738 for your taxes. It's about $1,300 a month of just write-offs that you'd have come April 15th on your tax.
Okay, and so also the other day we were talking about it's not a new trick, but I think we forget about it because there's so many cool things that lenders know how to do that we just forget to stop and ask and say what's best for our client. So we talked about a one-time upfront MI payment that also can drastically reduce your monthly payment. So let's talk about that because you told me we could do that with this renovation loan, correct?
So this piece right here, the mortgage insurance, you can actually pay for it three ways. One is monthly. Two, you could pay it upfront. It's called single pay mortgage insurance. So just a closing cost, a one-time closing cost. On this particular deal, it might be like $3,200, or you could actually finance that $3,200 over 30 years. Now, with sellers helping with closing costs, because there's a lot of seller concessions, you could actually put that $3,200 as a concession and they buy out your mortgage insurance for you. So your payment would be roughly $60 less a month.
Okay, so in this house, we're down here in South Austin. We're down here in 78745. Drop Reno in the comments, and we're going to send you the address, and we're going to connect you with Joel so you can look at the numbers and I can give you a tour. So what we're saying is you can move into this amazing 3-bedroom, 2-bathroom house. You have to see the lot. I'm going to take you on a tour in a second. And you could do whatever you want because in this situation, you get to choose the renovations of your choice.
Yeah.
All right. We're going to take a look at the house and give you a tour.